Yo guys, welcome back to my channel, and in today's video is going to be slightly different from the usual new launch analysis because as you guys know, for this coming May, I think there's going to be only one new launch, which is Hudson Place Residences, and then other than that, June is going to be quite quiet. Until July, we should be expecting the new wave of launches. For my clients, right, especially their budgets in the $2 million to $2.5 million range, there's not going to be much options, especially in the new launch market. You can't even really get a 3-bedder that is near MRT or near most of the decent facilities unless you are willing to look out into the more outskirts area. So in today's video, I'll be sharing with you guys one of the properties that I think is a good deal at this current moment because it is less than 10 years old. You can get it below 2.1 million and it's also a 4-bedder with 4% rental yield. So I think definitely it's quite interesting. So for you guys that are still looking around, you don't want to miss this video. And for those of you that's new to this channel, I've created a new Telegram group chat. You can scan the QR code or click the link below to join the group. So the purpose for this group chat is also to discuss some of the recent policy changes where we see at the EC side, and for you guys to actually feedback to me as well. And I think it's going to be quite interesting because for the conversations we have over there, some of the thoughts we have there is a little bit different from the usual narrative that you kind of see what most agents are talking about on social media. So looking forward to see you guys there as well. Okay, so for today's video, we're going to be discussing Parc Riviera. Alright, so Parc Riviera, for those of you that's familiar, is in the West Coast area and is right opposite V.A.L Residence, which launched last year. And in today's video, we'll be running through the VAL framework to actually see if the value proposition at Parc Riviera actually makes sense or is it something to be cautious about. So stay tuned. Okay, so diving deeper into the VAL framework, first up we have is the value component, and then for this one we're going to be doing the lease reset for Parc Riviera to actually see based on the recent transactions what kind of PSF and is it actually a high entry PSF. So for Parc Riviera, despite it being TOP in 2020, so it's about 6 years old, for the lease reset, right, we'll be using the tenure that started in 2015. So this is just something for you guys to take note. Okay, so over here we have the transactions for the 4 bedrooms at Parc Riviera, and then you can see we'll be using the transaction at the mid-floor, which happened at 20th November 2025. So this 4-bedroom transaction, right, this is a 1152 square feet at 1780 PSF and the quantum is at 2.05 million. After we do the lease reset, the PSF is at 2002 PSF. So definitely, I think in terms of PSF, especially in this area, it's going to be quite attractive already because even the nearby launches such as V.A.L Residence, the PSF is easily a lot higher than what we see at Parc Riviera, and that one is a lower floor development up to 5 floor or 6 floor range only. For Parc Riviera, you still got 20 plus floor range, so it's going to be a lot better in terms of view as well. Okay, so for the next component I'll be discussing on is the GLS Forecast, but I won't be talking about the GLS because we have a very recent new launch which is V.A.L Residence. I'll be using the average PSF from there, and then from there you can actually see what is the PSF gap looking like. Okay, so here we have the article by HProp, and then you can see V.A.L Residence achieved 86% sales at an average PSF of 2160, and this was in October 2025 last year. And for those of you that already has been tracking the units available at V.A.L Residence, you would know that some of the 4-bedders are, even though their price is starting at the 2.6 mil range, they are low floor, and on top of that, the kitchen don't have open windows, some of the toilets also don't have. Essentially like a 3-bedroom compact but into a 4-bedder layout type. So definitely I think the layout wise is going to be losing out to this Parc Riviera 4-bedder unit, and the maximum floor is going to be at most 4th floor, 5th floor. Whereas this mid-floor unit that we're talking about, we are still in the 20 plus floor range, and the layout is definitely still going to be a lot better because it still has an open kitchen in terms of the window. And I think in terms of pricing, we're talking about like 2.6 million versus slightly better layout, higher floor at about 2.05 million range. So I think the difference is about 500 plus K. And I think if you say in terms of age gap, definitely V.A.L Residence is going to be the newest one over there, but will it actually command a 500 plus K in terms of price gap? Okay, so onto the next part of the framework we have is the asset component. Okay, in the first one we'll be discussing is the livability of Parc Parc Riviera. Okay, so for Parc Riviera, the land size definitely very good size because we are looking at about 569,000 square feet of land size, and this is across 752 units. So definitely it's going to be quite livable because I think even the nearby plots, the land size could be slightly bigger, but in terms of number of units, this one is still quite decent when you compare to other areas. So here, next up, we also have the residential analysis. So when I first saw it, I think it was quite interesting because this is the area that you generally would think that is dominated majority by Singaporeans. Yes, we are looking at a 76% in terms of nationality, but we have a very strong percentage of PR. We are looking at about 20% in terms of PR. So this is quite interesting because it will definitely make some of the prices more sticky, because for the PRs now, the ABSD already has increased, so it doesn't make sense for them to let go of a unit over here unless they become a Singapore citizen. So that's why I think the percentage generally won't change too much. And if you look at the numbers that I will share with you later, it does also make sense like for a foreigner or a PR to enter the property and then choose to rent it out for investment. And then the purchaser's previous address, right? 40% comes from private property, and then we have 59% coming from HDB. So majority of the buyers here still belong to the HDB upgrader pool as well. Okay, so next up we have is the unit mix for Parc Riviera. Definitely this is one of its weaker points in terms of the unit mix, okay? Because when you see the 1 and 2 beders combined, right, we are looking at almost 500 units already, and this is out of 752 units in the development itself. So means majority of the units will be at the 2 beders, and this will be more catered towards like investment, rental kind of property lah. Despite its good land size, we are having a lot of 2 beders, but today we'll be focusing more on the 4 beders. So maybe you can see it as a plus point, because in terms of how many people are selling for the 4 beders, it's going to be very low in terms of supply, because over at Parc Riviera you only have about 136 units. Okay, so this is the unit that I actually recommended to my client. So this is a Parc Riviera 4 bedroom 1152 square feet. So now when we look at the living room area, right, definitely is a very good size, because this one now for a 4 bedder is already considered quite compact, but they still managed to squeeze almost everything in, and we still have a landscape layout along with the bigger balcony. So definitely I think very efficient in terms of size. And then even for the kitchen area, you still got storeroom and also a WC. Maybe it's a smaller kitchen and you don't have a proper yard area, but I think definitely for a 4 bedder in today's market, when you compare to some of the new launches, this is already a very good layout already. And on top of that, you can see for all the bedroom types, you can still fit in a queen size bed. So definitely a very good layout. Okay, so for the second part under asset for the VAL framework, we have is the scale and density of the development. Over here we have the site plan for Parc Riviera. Okay, when we see it on paper, right, it looks really good because large land size, decent number of units, and then the density is about 757 square feet per unit. Everything looks good over here, but I would say if you actually been to the development itself, you can really see some of the issues there, because I think for the multi-story car park, it's a bit awkwardly designed and it's right smack in the middle of the development. So if you have been there before, you can see actually they have the small courts at the corner at the back of the development and also on the right side. I would have preferred, right, if probably the developer make the pool facilities all towards the expressway side, so this will kind of create a further buffer for Parc Riviera units to the expressway. But I think they just put it in the middle like this. Definitely is a bit awkward lah, because when you want to like go down to the facilities, right, you don't really feel like it's very grand because it's split into 2 parts, whereas its neighbors like Twinview or even Whistler Grand, you get to see like the difference in terms of scale for the facilities. So that's for the first one. The second thing is when you also go down to the development itself, right, you can kind of tell, like, I don't know if it's the management or what, but it does feel a little bit run down in terms of the development. Like the basement car park area, you can see the facade, right, actually is for a 6-year-old development, it's not really well taken care of. I think I have seen even like 15-year-old, 20-year-old developments that is even better taken care of. Yeah, so this one I think probably they have to feedback to the MCST. I think these are some of the so-called weaker points that I see Parc Riviera when I compare it to its peers nearby. So naturally, when I see Parc Riviera, I think most of the people when they come and view this property, they could be eyeing at Twinview or Whistler Grand first, if their budget cannot fit into these two developments, then I feel like Parc Riviera comes into mind. So it's kind of the last choice in a sense. Yeah, so this is my overall thoughts in this area. Maybe you can let me know in the comment section, do you agree with actually what I've mentioned, or you have a different point of view. Okay, so now for the last one we have is location. So I think in terms of location, it's gonna be quite interesting because we are not near any MRT, but how is it actually gathering this 4% rental yield? Okay, so before we touch on the rental yield, let's discuss a little bit more for Parc Riviera versus its nearby peers, Twinview and Whistler Glen. So you can see, right, in terms of location, for Parc Riviera, we are definitely the nearest plot towards the AYE side. So definitely, I think the developers, they initially wanted to have the hard courts towards the expressway side. So you kind of have a further setback. But I think what they could have done better is they should have put the swimming pool also towards the expressway side. So this kind of creates a further buffer away from the expressway. And you can see, right, for Twinview and Whistler Glen, definitely they are going to be a little bit further away from the expressway, especially for Twinview is quite a far distance away, especially for those two blocks. And the swimming pool, they are still able to have it in between the developments and you don't really feel like it's that cramped. Whereas for Parc Riviera, I think because they have the multi-story car park, as a result, the facilities is kind of a bit awkward because one is in front and then the other one is behind. And if we take a look also at Whistler Glen, the land plot is a lot bigger as compared to Parc Riviera. So definitely, I think the two brothers, which is Twinview and Whistler Glen, slightly stronger as compared to what we see at Parc Riviera over there. But I think overall, in terms of locale, definitely is very similar because they are just right beside each other. And for Parc Riviera, right, we're still going to be within 1 km of the schools, which is Nanhua Primary and also Qifa Primary School. So definitely it's not going to be losing out in terms of primary school to Twinview and Whistler Glen. So that's why it still has quite a decent price performance over these past few years, despite being slightly lagging behind in terms of like facing towards AYE, upkeep of the development. Okay, so here when we zoom out from Parc Riviera, you can see we are just nice at the 1 km mark for both Nanhua and Qifa Primary School. So that's why we still see very strong take-up rate for HDB upgraders or even Singaporeans because of the primary school factor, especially in the Clementi area itself. Okay, and one more thing to add for this area, right, we do have some kind of transformation going on. So this is the Jurong Lake District transformation, but to be honest, I think Jurong Lake area has been undergoing transformation for a very long time already. We haven't really seen the fruition of it. But I think very close plus point is that we're gonna be having the new MRT station, which is the Jurong Regional Line. If you guys recall, for Faber residents, they did say it's about within 12 minutes, 11 minutes walk. Personally, I think it's a bit further than that. It's not really within walking distance, but that is going to be the nearest MRT to what we see versus Clementi area. But I think not to worry because for Parc Riviera, you actually have shuttle bus towards the Jurong East area. So that is why some of the tenants here, they actually like this because in the end, you still get direct access towards Jurong East and you're not paying rental prices at Jurong East. And if we actually zoom out from the Parc Riviera area, you can see we actually have a couple of like international business parks, industrial areas in the Jurong East and also West Coast area. So for Jurong East area, we have the top left area. Then if you guys are familiar, actually you have a lot of offices there, even Trade Hub 21, all this. So definitely a lot of jobs provided over there. And on top of that, on the south side of Parc Riviera, you also have some of the factories, industrial area that is going to be near the Sungai Lake, all those. And last but not least, you also got some of the schools, international schools nearby Clementi area. So just to name a few, we have NUS, you got UWC and also Singapore Poly. So a lot of these actually attracts a lot of tenants. You have a wide range from professors, teachers, families and even students that is here for exchange or even overseas programs. So I think in terms of tenant pool, you have a very diverse range. That is why you're still able to command this kind of high premium 4% and despite being far away from the MRT station. And over here we have is the recent transactions for the rental at Parc Riviera 4-bedder. Then you can see we have the lower range of 5.6k, but I think that one is a bit of an anomaly. Most of it is minimally at 6.2 all the way up to 7.2k. So I think the median range here we should be expecting is about 6.5k range. I think that should be quite expected. And you can see for the rentals, right, from July 2025 all the way to March 2026, it has been kind of constant at this $6,000+ range. So definitely it's going to be higher than your monthly installment. Later I'll be going through the numbers with you guys, but just to take note, because of all the different tenant pools over here, we can command a very strong rental. Let's just do some quick maths, okay? So purchase price about 2.05 million, down payment plus buyer's stamp duty 587k. A loan we are looking at about $1.5 million loan, and then the interest rate currently is about 1.25%, and then this actually results in an installment of $5,100. So of course you can say there's gonna be agent fees for rental, there's gonna be property tax, there's maintenance fees, but let's just put that aside. Right now, right, if you take the recent transactions at the rental side, 6,000 plus, you are still netting about 1,000 plus, which is a positive cash flow per month. And of course, I did inquire about the property that's on sale right now. The current rental rate over there is actually at $7,000 currently. So definitely very strong rental yield already, even higher than what we see on average at Parc Riviera. And when we look at some of the newer properties in terms of rental yield, right, for example those newly TOP new launches, I don't think they're going to be having this kind of high rental yield, and very likely you still need to top up cash because the installment is going to be higher than what we expect for the rental. So I think not every scenario new launch will actually be better than resale. I think in actual fact for this scenario, this particular property, the rental yield does make it very attractive, and we haven't even touched on the price performance for the past 2 years. So I think for that you can stay tuned. I think it's going to be quite interesting as well. Okay, so for the third and final component we have is liquidity. So this one is related to the exit strategy, and then we'll be covering on supply and demand for the first part, taking within 1 km of Parc Riviera for the past 1 year transactions. And then you can see this one is the 4 bidders across these 11 projects nearby, right, within 1 km. We have a total of 46 past transactions, and then the sizes range is 1152 square feet all the way to 2600 square feet, and the price range is between 1.9 million all the way to 4.57 million, and the average quantum is about 2.56 million. And the PSF you can see is 1070 all the way to 2004 PSF, so average is about 1008 PSF as well. And then you can see, right, based on the lowest quantum, very likely it's going to be within very close to what we see at Parc Riviera in terms of the quantum, because if you're talking about the mid-floor range, we are already looking at 2.05 million, so very likely the lower floors one is going to be 1.9 million range. And then the number of listings we have in the market is across 12 projects and at 33 resale listings. Okay, so the range is between 990 square feet all the way to 3003 square feet, and then the price range is about 1.89 million all the way to 4 million. PSF is about 1000 all the way to $2,700 per square feet. Okay, so when we look at the number of transactions versus the resale listings, we're looking at a very healthy demand supply ratio, because we still got 46 out of 33 in terms of listings. When typically when you're in the market, right, as long as you are priced decently well, you should be able to move the unit pretty fast. So this kind of secures the exit strategy side, especially in this area. And now for the next part, for liquidity, we're going to be talking about quantum gap. I think this is going to be the most important factor, especially in this area, because there's going to be a lot of neighboring plots that is similar in terms of age group, and at the same time also we have Faber residences that's going to be TOP and the newest kid on the block in this area. So definitely we have to take note if you are an investor looking in this area. Okay, so here within 200 meters, right, you can see for Parc Riviera, the first one, TOP 2020, 752 units, and then the price range transacted is between 1.9 million all the way to 2.2 million. So when you compare to the neighbors here, definitely we are going to be the most attractive one already. Then we have Twinview, TOP 2022, so it's slightly younger, total number of units 520, and then you can see for the quantum is already 2.38 million all the way to 2.93 million. So that's why just now I mentioned, right, usually when people look at Parc Riviera, it's because they are already priced out of Twinview, Whistler Grand, and even Faber Residence. That is why then they will consider Parc Riviera, but it doesn't mean that it's not a good buy, because in the end it is still very attractive at this price range, and there is still resale transactions being recorded at this development. So next up we have is Whistler Grand, so also TOP same year as Twinview, 2022 at 716 units. So of course for Whistler Grand, the land size is going to be a lot bigger compared to Parc Riviera, despite the number of units being very similar. So that's why it is still the preferred choice over Parc Riviera. But that is also why the price range, right, you can see for Whistler Grand 2.48 million starting from all the way to 2.57 million. So this easily has a 400k, even 500k premium over Parc Riviera for a similar size 4-bedder. Of course, the 4-bedder at Whistler Grand could be slightly bigger, but even so, the premium is still quite big for a 2-year age gap property. And last but not least, we have V.A.L Residence. So V.A.L Residence, you can see TOP 2030, total number of units 399, and then the size range between 1001 up to 1270. Of course, you need to bear in mind that this is a harmonized project lah. So the 4-bedders, even though the square feet is lower, it is still exclusive of the AC latch, okay? So the sales range is between 2.336 million all the way to 2.87 million. So these are the units already transacted at V.A.L Residence. So when we look at this entire area for the 200 meters radius, right, Parc Riviera definitely is very attractive in terms of entry price. So I think generally, if other prices for the developments move up, you would be entering Parc Riviera at a very safe entry price. And do bear in mind for V.A.L Residence, this maximum is I think up to 5th floor or 6th floor only. So this is actually low floor compared to what we see at a mid floor price range for Parc Riviera as well. So just to give you guys some comparison, right, my client actually, they were considering between Tengah Garden Residences versus a unit Parc Riviera 4-bedder, and I actually did the math for them, and actually it does look quite interesting because for Tengah Gardens Residences, the average, you can see 99% sold at launch, average price at 2120 PSF. And then if we are very objective, right, I think PSF wise is still very attractive because when we compare to just now the lease we set at Parc Riviera, it's going to be just about 2000 PSF range. So for this near MRT and even got school 1km, right, you are looking at about 100 PSF difference versus what we see at Parc Riviera only. So I think it's still a very good entry price. And over here we have the transactions for Tengah Garden Residences. I just want to focus mainly on the price range. We are looking at about 2002 PSF range, and then the quantum we actually hit 2.354 million. So this is easily 300k higher than what we see at Parc Riviera. For this is a 3-bedder, it's not even a 4-bedder yet. And if you guys actually watched my previous video where I discussed about Tengah Garden Residences, the prices here that I mentioned in the video, you can see the transactions for the 3-bedders, the range is between 1.4 million, maybe you have an upper range of up to 1.8. So these are the kind of range that you are working with at the ECs at Tengah area. Of course, these are the subsidized housing. Some may say that this is not a fair comparison, but I'm just looking purely on the numbers, right? We should be looking at about 600k to 900k in terms of price gap, because this is EC ma, and then you versus the first new launch in Tengah area, definitely there will be this kind of price gap. So it does really set a very different tone in terms of entry position when you look at the two different markets, because when you look at Tengah itself, you are entering as the highest property purchase in the area, but when we look at the West Coast area, right, Parc Riviera will be entering as the lowest price entry point, even when we compare to the new launch, when we compare to the neighboring plots less than 10 years old. So I think definitely very interesting, because there's a lot of people that still choose to buy this unit at Tengah Garden Residences. Maybe they see something that I don't see, but I also have recommended the other options to my clients. I think in the end is subject to individual, but some of them, they might prefer the transformation that's coming up in the Tengah area. They all believe that it could be the next upcoming Punggol. While that might happen, sometimes I will actually guide my clients to make a more prudent decision, because in the end, for the West Coast area, at least the demand has been kind of proven already at this price range, and we even have tested the higher prices, especially in the West Coast area. So I think in the end, we will still always want to protect our entry price so that we can ensure exit strategy in the future. Okay, so over here I have the price performance for these three projects, and we are just looking at the 4-bedders. So of course there is going to be a limited number of transactions because there's not much 4-bedders on sale. And first up we have is Whistler Grand. So Whistler Grand started off about 1006 PSF, and then the latest transaction we have is at Q2 2025, and then we have a PSF PSF profit of about 219. So this resulted in about 13% increment in price, even in the resale market. And I think it's safe to say that actually in 2022, the COVID effect already is gone lah, because I think that one is in the 2019, 2020, maybe you stretch one more year, 2021 effect. But once you hit 2022, actually you don't really see that much increase already in the property market, okay, as compared to the previous years. But we still see very stable growth even in the resale market over here. And next up we have is Twinview. So Twinview, you can see the first transaction is around 1007 PSF range, and then in Q1 this year we actually recorded the transaction over $2,000 per square feet for the 4-bedder. So this actually resulted in about 284 PSF increase, and this actually resulted in a 16% increase in terms of the profits, okay. So very good in terms of price performance over here. And then last but not least we have is Parc Riviera. So Parc Riviera started off about 1005 PSF, and then just last quarter we actually recorded about 1007 in terms of PSF, and this also resulted in net profit of about 226 PSF, and the difference is about 14%, 15% in terms of profit. Definitely when you compare to its peers of Resale and Twinview, it is lagging behind in terms of PSF. But when we look at the price performance, right, actually I don't see it lagging behind. So I mean, of course there's going to be preference for Resale and Twinview simply because it has a nicer facade, development, better upkeep. But overall, when we look at from an investor's point of view, actually I think in terms of numbers, it's not lagging behind that much. And if you look purely on the profit now, and I think Parc Riviera actually does make sense, because when you actually enter a lower PSF range compared to your peers, not only you're protected by the higher quantum that is transacted, you are also going to be getting higher rental yield, because very likely the rental across these 3 developments, if you can go and check, right, the rental is not going to be that far off one, because in the end for tenant, yes, they will prefer a better development, but if in the end they are not going to be that far off from each other and they don't mind development, like for example Parc Riviera a bit lacking in the swimming pool department versus Resale, right, then I think they might actually opt for the slightly cheaper option at Parc Riviera. But I think in the end here the rental is quite stable at about 6,000 plus, even $7,000 range, so very healthy here. So I think in the end, if you are an investor, right, you must not fall in love with oh, I die also want resale, I die also want a new launch. I think it's very important to look at your options before you dive into this big ticket purchase item, because I think when you are comparing certain price range, for example between the $2 million to $2.5 million mark, what is the best possible option for you in the resale market versus what you can get in the new launch market? I think these are all very important metrics that you kind of need to consider, because sometimes agents they might be very biased, oh only new launch is very good, or some of them feel oh wow, resale is much better because the new launch is very expensive. But I think it's more importantly to look at between the two and then decide for yourself whether it suits your needs more and your holding period, your horizon, all this. Because I think for certain age groups, certain profile, you might suit holding onto a rental property because it might be lowering your risk, you have a shorter holding period, and you might need a more predictable cash flow. Whereas for another group of people, maybe they are more aggressive, they have a longer holding period, holding tenure, then you can consider a more aggressive form of approach, maybe as a new launch or some areas that is up and coming. This is some of my recommendation that I've done for my clients, and for those of you that want a second opinion, you can feel free to reach out to me at WhatsApp 8484-9302. Alright, so that's it for today. I hope you guys got something useful out of it, and this is how I actually use the VAL framework to analyze Parc Riviera and also some of the new launches that you have seen in my previous videos. And if you like my content so far, you can feel free to leave a like and subscribe. And also for those of you that want to join my community, you can scan the QR code or even join the Telegram group using the link below. Alright, I'll be looking forward to hear from you guys. Alright, that's it for today. Bye!